April is here, and so our financial preparedness for the whole financial year. This week, we have 3 interesting and important webinars only for you. Morning 10 a.m., we have Why April is the Most Crucial Month for HNA Portfolio Strategy by Uday Kumar. Morning 11 a.m., if you have recently sold a property and you are thinking about how to reinvest the whole proceeds. So this webinar is for you, sold a property, and here is how to reinvest. Morning 11 a.m., we also have another webinar, 5 important money moves every Indian investor must know in April. Links are in description. Register now.
When the stock market falls, most investors panic. They start checking their portfolio every hour, and eventually, many investors exit the market at worst possible cycle. And here's the truth. Market crashes are not the biggest enemy of investors. In fact, market declines often create some of the best opportunity for long-term wealth creation. Here's what investors must actually do when market falls. Number 1. Stick to investment plan. Investors must understand that a market correction is common and a sharp fall triggered by global, local events happen every few years. Yet, despite the fluctuation, the Nifty 50 has delivered around 12 to 13% CAGR since inception. The real problem for investors is not the market fall. The real problem is entering the market without a clear investment plan. Having a clear investment plan and sticking to it can make a huge difference in long-term investment return. Number 2. Follow strategy, not sentiment. Another big mistake investors make during market correction is panic selling. During the 2020 market crisis, the Nifty fell by almost 40% from the January 2020 peak. However, the market rebounded within just 10 months. Investors who exit the market because of the panic missed a large part of the recovery. When the market are rising, people buy because of the excitement and greed. But when the market falls, they sell because of fear. And this creates the worst possible cycle in the investing. Buy high, sell low. Many investors sell during a correction and wait for the right time to re-enter the market. But the reality is the market rarely gives the clear signal. By the time confidence returns, the market has already recovered significantly. Your investment decision should be always based on the strategy, not sentiment. Third, don't stop SIP. For investors, one of the biggest powerful tool during market downturn is systematic investment plan. When market fall, your SIP actually works in your favor because when prices are lower, your SIP buys more unit. Over time, this helps reduce your average cost of investment. But unfortunately, many investors do the exact opposite. They stop their SIP precisely when markets corrected. And by doing that, they lose one of the biggest advantages of disciplined investing. Never stop your SIP during market correction unless your financial situation has genuinely changed. Number 4. Rebalance your portfolio. Another important principle that many investors overlook is asset allocation. Your entire portfolio should never be concentrated only in equity. A well-balanced portfolio in financial assets includes usually equity, debt, gold and silver, and cash. Putting money into different baskets reduces the volatility in portfolio because different asset classes often behave differently in various market conditions. During a market correction, the value of equity in your portfolio may fall. When that happens, your asset allocation automatically changes. And this creates an opportunity to rebalance your portfolio by putting in additional sum in equity. The simple habit can manage risk and improve your long-term return. Thus, for all investors, the real advantages does not come from predicting the market. It comes from having clarity and discipline in the investment strategy. And this is also where goal-based financial planning comes extremely important. At Milestone to Wealth, the focus is on helping investors build goal-based financial plan so that market ups and downs does not create confusion or panic. If you want to understand how your investment can be better aligned with your long-term financial goals, connect with Milestone to Wealth for more structured and disciplined investment approach.